Alright, traders, just get going here. Yeah, we had some interesting news overnight from the ECB. Sort of walked back the QE comments from last time, and this is it's creating a little bit of issues in the market. I mean, you know, the dollar yen tried to rally today, couldn't get past 111.50 again, but euro dollar's well below 108 now. Now I'm probably going to take a stop on this euro soon. If you can get to say 106.80. Look, I'm in two minds about it. I understand the rally, but it seems like ranges are holding. All right, so you know the range in the euro for a long time is 108.20 to 108 to 105, and look, it's back into that range. And while the breakout looked good for a certain time, you know, sometimes it just doesn't work. And I like long euro, long pound, and short euro pound is the way I'm playing it now. Short euro pound's fine. Long pound, I don't really have much exposure. I'm looking at that to get back in. You know, but what I want to happen here is a euro rally and a pound rally against the US dollar. More concerns about Trump's ability to get things through, and stock market weakness. And we're not really getting the stock market weakness, a little bit today, but nothing crazy. We're not really getting the US dollar weakness. Dollar yen's providing some support. You really need, I mean, that taking away that ECB story sort of takes away the euro, which hurts the whole idea. It is an interesting market, to say the least. You know, which way to play it here. The yields are not falling much further in the US either, and you know, the longer we go sideways, the more time the US dollar has to gather strength again. So, you know, if there isn't really much hard-hitting sort of trends at the moment, right? We're sort of trying to play breakouts or just market movement, looking for 50 pips rather than 200 pips is the way to be playing. And it's a little bit harder in that environment to trade if you like big macro sort of themes, right? Like I do. It's not giving you that price action. But look, it's early days, you know, at the moment still. Perhaps the euro can rally again. I'll be looking to get out of a trade. I've got a few euros above 108. I would be looking to get out towards 107.80. Minimize the loss sort of scenario. Look, it can happen, but it's not looking good. Not looking good. The ECB really, I mean, jawboning coming from the ECB, cheeky buggers, out of nowhere. You know, they're basically trying to stop the yields in the eurozone rallying and dial back expectations that next ECB meeting is going to be strong. Pound is searching for direction, yeah, and so look, next direction it makes probably is going to be a pretty big one. Headlines are pretty muted and also not having much impact. So no one said anything yet, which is crazy enough to get the market moving. Both May's letter and May's speech and Tusker's reply was both pretty standard stuff in the Brexit world. So nothing yet to get too excited about. Yeah, it's like, well, what do we even want here? Do we want stocks to fall or not? I think stocks falling will help US dollar weaken. US yields, 10-year, are also meandering around. And it is, you know, month-end flows now. Now, month-end flows usually help the euro, but this particular month, the Dow has been under pressure and the DAX has been very strong. So let's just have a look. What you want to do if you want to know what month-end flows are going to be, you look at the difference in the main indexes, right? And you look at the change in the currencies. Okay, so in this particular index, the DAX, say for the euro, it's stronger on the month, and for this particular index, the US, it's weaker. That creates natural euro dollar selling, okay, at the end of the month. Now that could be contributing a little bit to this weakness in the euro, but also that ECB thing is pretty key, and it came when the euro was sort of asking the question of whether the rally is going to work out or not. So it came at a very opportune time. Maybe they've got a few currency traders over there at the ECB, because that little sell-off helped change the technicals a little bit here by the dip, and now we've got ourselves a bit of an even battle. But yeah, so that flow is negative for the euro. Now on the other side of the coin, usually you have euro pound buying at the end of the month for UK's payments into the eurozone. Now that is also well known about and sort of spread out over the last couple of days these days, but that will lead to more pound selling given that the euro sell. Alright, so maybe in the next couple of days we'll see a little bit more US dollar strength than otherwise would be expected. And then we're getting closer to next week, which is the data dump week of the month. So the first week of the month is the data dump, the last week of the month is pretty much nothing. To get excited about. US GDP tonight is final GDP, not start GDP. But yeah, you're right, Potter. ECB comment was a pain in the ass for the current plan. Alright, it's not too bad for the euro pound shorts, and I did add a little bit more euro pound short just on the back of some German CPI coming in weak, which is bucking the trend of globally, right? The CPI has been pretty strong globally, yet in Europe it came in weaker, in Germany I mean, in some of the states there. So I don't mind continuing to sell the euro. I think it's got more headwinds just in the next 24 hours anyway than the pound does. And you never know, the pound might surprise us and get a little bit of strength, just a little bit of delayed reaction, a bit of more short squeezing, as nothing down happens, right? I mean, like, today I had this discussion many times with traders. The Brexit announcement, right? I mean, on the face of it, should be a negative thing. Now, the market didn't short squeeze, but it didn't sell off either. So, in the event that it does nothing like it did, is it good or bad for the pound? And I think on the balance of things, it's probably good, right? The pound could have acted much more negative than it did. Obviously, it could have short squeezed as well, but we've already short squeezed a few times in the last couple of weeks. So steady is not the negative. I don't think steady is negative. In a downtrend currency, steady is probably okay. We're not talking about a currency which is just beginning its downtrend or is halfway through it. We're at bottoms. We're not at bottom, but we're at low levels, and the market going sideways is more concerning for the sellers than the buyers. The buyers will be keeping on looking for a reason to keep buying, and the sellers will be like, come on, hurry up already, I have to close this at some point. Right? You don't sell a pound at 124 and hold it, expecting forever that's going to keep on going down. It's a tactical trade more than anything else you'd expect for the majority of day traders out there. So without selling coming through, probably within a couple of days the market will short cover just the recent sell-off. But this is contingent. At this point, anything can happen with headlines that come out. I'm just saying the whole concept of selling the pound is we're trying to sell and we're trying to close. Whereas some pound buyers are more like, I'm going to buy and I'll close much higher. So who's going to be closing first? The buyers or sellers? Definitely at these levels, the sellers. And so accumulation or sideways movement is probably a good thing here to be looking at. The shorts would spook easier than the longs, in my opinion. Now that's a very highly subjective way to trade, and is something you should only do after many years of trading, and definitely have the ability to self-analyze and say, well, this is a pretty, this is not really chart-based, this is my idea-based. Let's not go to war with the market, right? Let's if the market starts to fall, take your stops. And so there is a bit of self-awareness involved in any sort of trading like this. You have to be able to close out. If you can't close out, or if you're trading in your first year, don't take views on the market. You respond to the market. Kiwi dollar. Kiwi dollar is going sideways as well. Now, Kiwi dollar going sideways usually leads to a rally. This current environment, though, it's choppy. So buyers on the dip are wondering, well, why are we not bouncing higher? Generally, if you've had a few tests downside and then the market is trundling along in a tight range, the market's heading higher, but the lows are getting a little bit higher, a little bit lower, and the 70 cents, which is a big figure, right, is been tested twice already. So just take, this is a relatively easy trade. You buy here, you put your stop just below, or just even below, if you want a bigger stop, and the risk reward is great. Yeah, the market is searching for direction, but the stops on this side are much easier to see than the stops on this side. And then but they generally, like the Aussie and like the Kiwi, and the Aussie is doing better than the Kiwi in the last couple of days, is buying the dip in a grind higher. The Kiwi's not doing that; it's sort of just grinding sideways. Very uncommon for the Kiwi actually to not be better supported on dips in a sideways market. But yeah, I'm not against buying if that's your preference. If you're looking for me to sell the sell side, yeah, not my game. I'm bearish US dollar, so I put that out there when when you're listening. I mean, maybe every commentator should have a little signal above their head, bearish dollar or bullish US dollar, when they start talking, because it really, that one little bias influences almost every decision they're going to make, whether it's on the majors or the crosses. Right, crosses behave differently in a bullish US dollar market compared to a bearish dollar market. Yeah, so buying with a tight stop. I mean, let's see how it goes. All right, let's do that trade. Let's do that trade. We've got some short Euro pounds. We've got some Kiwi. The only reason we're doing this trade is for the risk reward. Yeah, we're not doing it for any other reason. And the reward is all the way up here. All the way up. So, good 20 pip stop, 30 pip stop, versus 90 pip take profit. So 3-1, this particular scenario. You take those all day, right? So let's see how that plays out. Yeah, no, I was really bulled up. If you remember, if you watched this stream for the last 2 weeks, I was extremely bulled up on the euro. I'm very lucky to not have lost a lot of money on that trade. I was buying dips heavily, and just randomly I didn't buy that dip that heavily. So I've been buying all the way up, and I didn't buy this dip that heavily. So I could have got into a lot of trouble here, because in theory that's the buy, right? You buy again, it's the breakout buy, the retest, bang, bow. But I was actually looking to buy more as it showed a bit more strength. I was a little worried that it got underneath that previous resistance level. It closed that gap and didn't come back straight up. I mean, if it came straight back up, that's just a pretty standard little trade. But if it doesn't come straight back up, it's like, whoa, that's weird. That's weird. Can't get really past your previous resistance again. And that was pre-ECB. That was just price action trading. So I bought a little bit, but didn't buy more. I would have bought more on that next leg higher. A lot of the times you use strength as confirmation of your trades. It's a safer way to trade. It's almost the reverse of your natural instincts, which is to buy cheaper. It's to buy strength, buy more expensive. Right? If we actually sell as the market goes lower, sell more as the market goes lower, and buy as the market goes higher, buy more as the market goes higher, you're going to end up making a lot more money than doing the reverse of that. Alright, but it's just extremely hard psychologically for your brain to comprehend it. Oh, I'm going to wait until it goes higher to buy. What? What? But think about how many accounts have been blown up for doing the exact opposite. Just 1 second, boys. Another broker call. No, I do not need a broker. Yes, I've traded before. Is it funny, huh? You know, to get those calls. Look, so I just wanted to know if you're interested in trading with Royal Caribbean FX located in Maldives. What? No. How'd you get my number? Yeah, I don't know. These days, it's your details are just sold. Towdy's worried about that, Potter. He'd be like, don't know if you can use your swaps as a tax deduction. No, it's yeah, it's okay. It's all okay. Now I put up my big boy trading boots this year, going back to work. So my equity swings are in the thousands, not tens of thousands. It's less stress, that's for sure. Yeah, look, it's an interesting little situation. Something that maybe Jason and Andrew can talk about. You know, why do we buy more as the market goes higher? It's you know, it's an interesting question. Is it really safer to get confirmation from the market moving in your direction? I suspect it is. Right? I mean, initially your outlay is a lot smaller too. You're only buying more when you're in profit. There has to be something to that. Okay? It's just, obviously it's not perfect. Perfect is to pick the bottom, pick the top. But that's hard to do. So, you know, and there is some gravy in the middle. NSAIL, you're right. So there's, you know, everyone's looking between 105 and 108. But, you know, what happens at 106 and 107? On the euro dollar for say, or if the dollar yen breaks 112, yeah, what happens between 112 and 115? All right, do you just do nothing but at 113 and 114? It's an interesting question. I mean, statistically, and it's not just statistics, guys. It's not just statistics. It's also about self-psychological management, because you have to feel comfortable with your trades. Yeah, that's hard to do sometimes. So you have to feel comfortable with your exposure. You have to feel comfortable adding. So you can't build up big. You can't just go bang. You know, 5 lots at the bottom if your normal size is 1 lot. And if you're wrong, you lose 20% of your account. Right? But if you build up 5 lots as the market goes your direction slowly, that has to be easier and more safe. And your entry point is going to go higher and higher, your average entry point. But it's I think it's a better method to be mastered than looking to trade 100% accuracy, which is a dream, right? It's a very big dream. No one knows what's about to come out next. No one knew that ECB was about to come out, which changed everything. No one knew that, you know, dollar yen was about to break 111 as healthcare policy couldn't get out. You could assume it, but you never knew, right? It's there's a lot of unknowns in the market, and the market's an evolution. If X, then Y. You know, different branches almost at each juncture. We can get into philosophy of trading another day, though. I don't want to spend too much time on my reflections of how the market evolves. But yeah, I really think it's a very dynamic and fluid place that is extremely hard to predict, and therefore you need a reactionary function in your trading. Like, that changes everything, has to be part of your trading idea. And if you're going to get a good edge, a big edge in trading, a purely mechanical, technical system, I do believe will fail. Will not give you as big an edge as having a reactionary ability to news. It's not a closed system, right? With humans trading human stuff. Although that will cause some arguments with some of you technical traders. One day, Nick's going to have to hold a debate between technical and fundamental traders, right? A round table. Uh-oh. It begins. Then Sal's going to let us know. Alright, let's have a look at some of the data. Debate, then a fight, Potter. Debate, then a fight. Yeah, so what's the rule going to be? Is the rule going to be, you know, the market just moved 50 points in 1 minute or in 5 minutes and didn't bounce, recover, suggesting whatever news came out was sufficiently negative? Yeah. Look, the humans, machines do have a huge advantage by cutting out emotion, but machines don't know to go all in, right? I mean, you talk to any big hedge fund guy, or you talk to any really big trader and good trader who made a killing in the market, you know, they have these stories about these trades where they saw it. They saw it and they did it. And they risked like half their personal wealth. I will bring a selection of hedge fund stories to you in one of our updates, guys. Carl Bass. Not Carl Bass. What is it? Who is it? Get the 10-year yield up just quickly before we get into the research for tonight. Yeah, we're quite reflective today, aren't we? So yeah, US dollar's doing nothing, US index is doing nothing. So if anything, that's weak looking. So that could help help the PS trade against the US dollar, help stock markets rally. Sorry, not rally, but fall. Dollar yen fall. Euro pound's making another leg lower. Got a bit of a cluster of resistance, support down here. Got to get past this to open up these downside. But I was quite comfortable in selling a little bit more early on that weak CPI. Let's have a little look.
How does Trump change your view of the world? Broad strokes.
So Trump is going to change, I think, both from economic policy and foreign policy, is going to take broad, big steps in the world. And we think about it from an economic-centric perspective, as well as, I like to read all of the geopolitics.
This is made early. This is January. Right, this is interesting. So he's trying to predict the future. I don't know. I haven't seen this before.
But I focus on the economics. But from an economic perspective, his plans to say lower the corporate tax rate from 35 to 20, or I think he wants it even as low as 15, entering kind of bringing with it accelerated depreciation, as well as kind of a honeymoon or a specific period of time that you can bring back the offshore capital. All of those things are going to be extremely stimulative. It will start favoring labor over capital, which we've been favoring capital for the last decade or so. But what we're going to see, right, if you get accelerated depreciation, you're going to actually see real capital investment. And if you see real capital investment, maybe the productivity numbers that have done nothing but go down in the United States, because the capital that's been being used has been engaging in share buybacks and dividends, which have zero productivity associated with them. So we're going to see real capital investment. We're going to see trade competitiveness from our corporations with the lower tax rate. We're going to eliminate offshoring and Europe stealing our tax base. And we're going to start, let's say, getting fairer shakes or better deals with our trading partners. All of those things are going to happen at basically full employment. So we're going to see a very stimulative environment if Trump is successful in his endeavors, which is going to be very positive, I think, for the United States and slightly negative for the rest of the world. But it's not like the globalist nightmare, in my opinion, as they are trying to make it. I think we mentioned that, talked offline, I think the U.S. has been a price, a wage giver and a price taker for the last decade or so, and we're just going to be a wage taker back for the next few years.
So stimulative for the U.S. economy,
yeah.
Potentially inflationary for the U.S. economy, better for the U.S. at the expense of the rest of the world. Is it as simple as short rates dollar strong?
If you need to boil it down into a soundbite, I would say yes. Clearly, there are idiosyncrasies of every trade relationship, but one would think that if we get to this, the question is, how do we pay for it? How do we pay for cutting the corporate tax rate from 35 to 20 or 35 to 15? It's my view, our view at our firm, that border tax adjustability is the only way to pay for it. And it's basically taxing the trade deficit, right? It's broadening the base and forcing your trading partners to pay for the cut in tax. It's actually very elegant. And as I mentioned offline, in 1990, Marty Feldstein and Paul Krugman actually agreed on something, and they co-authored a paper for the NBER on the positive attributes of border tax adjustability. I think one could make it a bipartisan success as long as the special interest groups in the U.S., i.e. the Retail Federation, the Walmarts, the Nikes, the people that have supply chains offshore are lobbying like hell against it. And I think if Trump runs into enough resistance on border tax adjustability, he'll just use his authority at the Commerce Department to impose tariffs.
As a macro, if you will, sometimes special situations investor, how'd you play the election?
So we weren't playing, quote, the election going into the election, but what was interesting was, as many people know now, is when you saw Trump was starting to hold the lead in Florida and then kind of solidify his lead in the upper Mississippi River area in Michigan and the other areas around there, Wisconsin, the markets made very, in our view, irrational moves. Especially global currencies went into kind of a risk-off dollar weakening scenario when, if you studied the policies of all the various participants or understood them, they were all going to be pro-growth, and Trump was actually the most pro-growth of them all. And so we took fairly large positions in global currencies that night. And
like Carl Icahn, and 11:30, 12 o'clock at night, you were investing
in huge amounts. Yeah, because we just thought the world was misinterpreting the win, and
he would have made an absolute killing that day. That's the day the dollar yen rallied 600 points. Jesus.
Fortunately enough, every now and then you get something right. It doesn't. You don't get it right all the time. God knows I don't. But that one seemed to be a little easier.
That was an equity trade?
No, it was all currencies.
Fuck you. It's like, Jesus Christ. Jesus Christ.
All currency trades.
Yeah, currencies and rates.
Are there any natural Trump trades right now?
Yeah, I mean...
Because some of this stuff has played out, clearly, since the election.
Well, says who?
No. Played out to a degree. I'm not saying it's played out to its natural
conclusion. It's moved a little bit so
okay.
far. Yeah, no, I think that given what I just went through with you, look, real rates in Germany are at their lowest level ever right now, and inflation in Germany is spiking. It's not even moving in a linear fashion, and you've even seen members of the ECB and the Bundesbank speak today about the fact that I think we're going to see inflation running much hotter than any of the central banks thought it would. And therefore, I think the move in bonds is just beginning.
How quickly is Draghi, if what you say...
This was made well before European bonds started to rally. The yields.
It plays out, the natural course of action would be for the ECB to raise interest rates.
Well, yeah, so it'd be a combination of tapering. Even though he cut it 20 billion last time, he somehow convinced the market that he wasn't tapering. He's going to have to taper some more and possibly raise rates.
How soon?
I don't want to speculate there, but let's say in life cycles, what Trump's going to do is he's going to speed everything up.
You have been out with a bearish view on the Chinese banking system. A lot of people say you're bearish on China, but it's really bearish on the banking system in China, right? For about a year now.
That's right.
What, if anything, about your thesis changes with Trump?
Well, whether you look, so first of all, you kind of have to study the backgrounds of everyone that's advising Trump on China. So whether it's Wilbur Ross or Lighthizer or Navarro or D'Amico, read Navarro's books, read D'Amico's blogs.
Try to a little Tillerson too.
And Rex's comments in his confirmation hearing. Look, what they're all doing is they're all saying that China's kind of gotten the better of us in maybe the last 8 to 10 years. I tend to agree. But what's important about that is developing the lens that the White House is going to be looking at China through is really important as an investor. And my view is that somewhere between free trade and 45% tariffs is where we're going to end up. And with that comes profound consequences. And some of those are economic and some of those are geopolitical.
It's important whether he, and when I say he, Trump and his administration choose to take on China through established channels like the WTO, or whether they choose to impose some kind of a tariff, like you say, whether it's 45% or something less. What do you think is most likely, and is that part of your thesis now?
So I honestly don't, I've never met Trump himself, but I don't know what's most likely. What I know is what I just said. Somewhere in that continuum is where we're going to end up. My own view is the only way to pay for corporate tax reform in its fullest sense is through border tax adjustability and not through tariffs. But that has its legislative problems.
Let me put it to you this way. Let's say, for argument's sake, the United States imposes some kind of a tariff on Chinese imports. This might be important to your thesis. How does Xi respond?
Yeah, as Xi's mentioned, they have a plan for response, right? So the first plan for response is economic. The question is, does all of this economic wrangling really start a fire that ends up moving into a kinetic response in the South China Sea? It's something we hope does not happen.
It's pretty good stuff. I don't know if you guys like it. I love it. It's this is made ages ago, like a couple months ago, so it's a little out of date, but it's very. I mean, the guy's fucking really switched on, and he's talking about the future. Yeah, he's. I'm gonna watch the rest of that later. I might watch the rest of it at the end of this thing. Little spike high here on that China news. I'm looking for any excuse to buy pound yen. Just bought a little bit of pound yen with the stock below the low. So really, stocks would have to make new lows, and dollar yen would have to reverse again. Pound can continue doing what it's doing at the moment. Yeah, so it's that's just I mean, maybe it was a bit impulsive, but it was I still see this particular going higher. Pound yen over time, and I just don't want to get in too late. Yeah, so look, it's a tight stop, but I'm not going for 100 pips. I'm going for 3 or 4, 500 pips on the pound yen. Eventually, when you get it right, it might be a little early though. But yeah, let's have a look at some of the research regarding what happened overnight with the UK. Most of these guys gave their view. Most of the banks gave their view on the on the Brexit. We'll come back and check what's going on with dollar yen and pound a little bit later. Now, these EU negotiation guidelines will be interesting, and the summit, that's going to be very interesting. These guys have such close military and security relationships that perhaps that will be a binding sort of form, a place to start to get some positivity. Obviously the main negative and what we want to see is the banking and the access to the single market and what form it's going to take for UK. But it's Alright, so the UK, this is a thing which is going to be talked about a lot in the future. The UK will have to accept budget contributions and compromise on the freedom movement. These were the two biggest parts of the main reasons the UK left. Right, so if they have to compromise again, then it's going to be interesting how that comes apart. And this is the other big issue. In Europe, there's this idea that they have to punish UK to make sure none of the other European nations leave, right? Especially with all the right-wing parties gaining in popularity. So what they're saying here, with populism increasing felt across the continent, the EU must take into account this threat a successful Brexit will present the European project. So there is some sort of expectation that the EU will try and punish it or make it hard for the UK. But perhaps if the elections don't go as badly in the EU as presently thought they are, and Netherlands showed a bit of a pushback against populism, you won't see such an aggressive move against UK to punish them. It's not in the EU's benefit to have a bad relationship. Like longer term, just short term politically maybe. These guys are bearish though. These guys are looking. Deutsche Bank's looking for 105, I believe. This is a huge article. I might be able to just send it to you guys on an individual basis if you contact me. Much nicer and got some diagrams is the ING. So the EU put out little guidelines, leaked. They want a 3-year transition period, different to the 2-year needed, to make it deal before the UK leave. No sector-specific deals, including on finance, which is interesting. Have to deal with the exit before they deal with trade. You remember they're looking for a huge payment from the UK when they leave. Something like £50 billion last time I heard. Alright, but this is What is going on with gold? Don't get me excited, guys. Or nothing. Why are you getting excited about that, eh? So the EU tactics versus the UK tactics. UK tactics seek mutually beneficial deal from the EU, plus protect domestic interests, pound up, up, up. And if the UK protect domestic interests, EU protect domestic interests, down, down. If UK be nice but Euros mean, then pound down. Perhaps, perhaps. The forecasts are pretty much unchanged this year. Nothing crazy in the movement. Looking for a general rally in the euro though. Alright traders, that will do for today. Look, next week is a big week, so this week should be just a final finish out the week sort of trading in the next 24 hours. To next week though, we're going to be focusing on RBA, focusing on NFP. NFP is the main way in which US dollar strength comes back, and the Fed raising rates earlier comes back into the frame. If it remains super strong as it has last month, that will be interesting. But other than that, yeah, don't expect too big a movement. Let's see if the euro can find some support in the next 30-40 pips. And dollar yen, otherwise let's see what happens with dollar yen if it breaks 111.50. And just generally if the pound wants to pick a direction is also interesting. US stocks today will probably be most important for the dollar yen, and whether it can break higher or not. Alright, good luck with your trades, guys.